Hello guys, bit of an early stock Saturday. I'm recording a little bit early because I'll be away for the weekend. So no Crypto Sunday video, but I thought I would record this a little bit earlier since it's the vast majority of the portfolio now, where it sort of didn't really used to be. And yes, it's been a rather nice week, up about 8.5%, which is pretty solid. The overall market has had a pretty good week. And yeah, looking at the S&P, because I'm sort of recording a little bit early, it's not the last 5 days, but the S&P's up about 3.71% for the week. We've had sort of Thursday, Thanksgiving bank holiday in there, so that was shut, but still managed 3.71% for the week, which is better than most weeks. And the Nasdaq is up 4.93% for the week. So very solid. I'm sort of outperforming that slightly, partly due to crypto, partly due to gold and silver, especially today actually. It's sort of on a bit of a tear, and some of the sort of miners are performing very well. So yeah, thought we'd have a look at some bits and pieces. Thought I'd take a break from earnings because, the metals do have such a strong impact on my portfolio. I thought this was kind of important to highlight. The Silver Institute's estimates for 2025, they are still expecting a very large deficit. I really prefer the looking at their table. So it gives you a good idea of supply and a sort of reasonable breakdown of demand with their 2025 estimate. Obviously, we've only got, just over 1 month left, but these are probably slightly old figures. I wouldn't have thought this includes October or November actual figures. This is probably just an early estimate for the year. We sort of find out the real numbers early next year. But yeah, the total supply is up ever so slightly from last year, up 1%, up from the sort of triple figures that we got down to in 2023. But it was more than that in 2022, and sort of similar numbers really to 2017. So it's basically on a sort of long-term, fairly tight range, and considering demand is still pretty strong, and above supply for a good few years now, that is more diminishing above ground stock. So industrial demand and things, it looks like, is coming down ever so slightly, 2%. Photovoltaics looks like are still strong, but not really sort of increasing at the pace that they were. I don't think we could sort of expect them to keep doing so. I don't know if they give a particular, PV silver demand forecast to increase by about 5%, but yeah, whether there's they're saying global economic uncertainty from tariffs and geopolitical tensions and things. I would sort of wonder whether this is early news, and sort of they're not really taking into account that the tariff threat has dwindled a hell of a lot. So there's potential that some of this industrial demand is a little bit higher than these estimates. But yeah, we'll have to see. Net physical investment down from previous years, or coin and bar demand. Not too bad, 182 million ounces, but yeah, it's a little bit down. But total demand, excluding sort of financial products, still 95 million above total expected supply. But then investment products, net investment into exchange traded products, estimated at 200 million ounces. So we only had 2020 higher than that. Every other year has been sort of double figures or even negative 117 million in 2022. So 200 million ounces. Obviously, industrial demand actually does get used, and in most cases it is gone and never sort of recoverable. Whereas investment in ETPs, it can always come out again. But if you include that, at least we're looking at a 295 million ounce deficit, which is the largest we've had, even more than 2020. So very, very nice. So you see this net investment in ETPs is actually what caused the kickoff of the deficits, because 2019 and 2020 were actually a surplus as far as supply demand goes. Before the exchange traded products, you had 83 million causing a deficit in 2019, and then this enormous number, 45 million physical surplus, I suppose you'd call it, and then 331 million ounces into exchange traded products when everyone was going bananas in 2020. And then, it sort of continued. You had an outflow of investment products in 2022, but it was still a deficit, and you're just getting continued triple figure million ounce deficits every year. And one can sort of think this can only go on so long before, the above ground stocks are completely eroded, and we're sort of arguing over just current supply. So potentially we are, getting close to that when you're seeing sort of $2 moves, $3 moves even. I think we saw a couple of $4 moves up and down in the last sort of couple of months, where sort of I used to be, a little bit surprised. You'd sort of double take a bit when you saw a full dollar move in a single day. Now that sort of is kind of small fry. I think it looks like silver could end up about $3 up today. So that's incredible numbers, and much, much higher than gold. It would sort of normally, outpace gold when gold's doing reasonably well, but not sort of 4 times the gold move. So yeah, pretty happy with that. Not exactly a huge bit of news, and probably not that much of a surprise, but it looks like the DOGE, Department of Government Efficiency in the US, has been basically completely disbanded. There were sort of talks, obviously, that it's way lower numbers than were originally predicted. There was talks of sort of $2 trillion in savings, and then it was, sort of watered down to $1 trillion, and then they started saying, well, we think we can get to $250 billion in sort of the near term, with targets for more. And now is sort of debate about it all over, really, whether they've even got sort of a couple hundred billion, and of that couple hundred billion, some of it they're expecting to have to sort of reverse, because it was just sort of sledgehammer to crack a walnut stuff, and a year later you find out actually we do need some of what they cut, so you sort of rehire workers and rebuy things, and you sort of end up maybe paying more, and sort of hiring someone that you had to lay off and give redundancy money, and it's just not very efficient. So 200 billion may sort of net down to, like, I don't know, 100 billion, 50 billion or something of savings, which is sort of arranging deck chairs on the Titanic, as they say. But it's basically been quietly sort of shut down well ahead of schedule. I think they were saying it was due to run until 24th of July 2026, and has essentially been axed. So full steam ahead. The sort of narrative around the US at the moment is grow their way out of recession, run it hot, high, low interest rates, sort of high economic growth, but also high inflation, and they'll just accept that, basically. But obviously Elon Musk was extremely unhappy about that. He sort of tweeted it. The one big beautiful bill was an abomination, and that was basically sort of the end of his involvement. I thought it was very interesting. So probably worth having a talk about the budget, since this is one of the more contentious budgets that we've had in a while, and it got even more contentious because the Office of Budget Responsibility sort of leaked almost the whole budget about an hour before, or 2 or 3 hours before the start of the speech, and sort of heard one of the Labour MPs sort of handed Rachel Reeves their phone and sort of basically informed her that what she was about to say had already been leaked, and yeah, reaction sort of wasn't great. But we had some interesting stuff in there. I sort of seem to have largely come out of this unscathed, which is pretty good. I was expecting some a bit of a hit maybe on capital gains tax and things. They sort of keep going on and on that they don't want to hit ordinary working people. So I thought that meant hitting capital gains tax and sort of maybe wealth tax type things. But yeah, they don't seem to have done all that much. There's some sort of business stuff, increasing, corporation tax penalties and sort of tax evasion, tax avoidance, and sort of tax evasions really, and fairly small stuff, tackling fraud and yeah, the usual stuff. The big thing everyone's sort of now focusing on, it's not really so much a stealth tax anymore. Income tax thresholds. So the thresholds, the 20% rate and the 40% rate have basically been frozen since 2021, I believe, and are going to be frozen until 2031. So 10 years of the same rate. And obviously, if you're on sort of 40,000, let's say, back in 2021, you keep getting continual pay rises. It's taken 20% of your wages. You go move into 50,000. And then it starts taking 40% of your wages, and you've got national insurance on top of that, and a lot of people have got student loans, and so you're potentially losing sort of 50%, over 50% of your gross pay if you get a pay rise. So yeah, not people aren't particularly happy. Still think this seems to be sort of the most palatable tax, I guess. People sort of in pound terms will say, like, I'm not getting taxed more this year. It's just sort of, if you get pay rises, then that gets taxed more, and it's not, a hit that you can say, well, I'm worse off today than I was yesterday, because it's just frozen. But obviously, over 10 years, it does really start to have a significant effect. I sort of showed before where they were projecting the tax that they were going to get 3 years, 4 years down the line. And when the time came, it was like they're getting 40 billion more than they thought, which is, sounds lovely, but it is 40 billion of lost income from people, and it does hurt. Other things that they're doing, separate property income tax, so just every year seem to be whacking landlords, which I'm not all that all that unhappy about, to be honest. I kind of think, if we had more council houses, I do wonder whether the long-term plan is to sort of have less private landlords and more council houses available for rent, and the government just make that money instead of private landlords. They sort of seem to talk as if they're providing some sort of charitable service to people and not solely in it for financial gain from renting out a house. Dividends, this was sort of one of the only things that does directly hit me. 10.75% on the basic rate and 35.75 on the higher rate. I'm never going to be anywhere near the additional rate, I wouldn't have thought. So yeah, that's a bit of a hit. Obviously, it's it was 8.75, so it's like a quarter more than used to be paying, but 10% on dividends, or 10.75%, isn't exactly a lot of tax. If I were to sort of quit my job eventually, then you get a load in the personal allowance anyway, and then you get 500 quid for free, and then 10.75% on the remainder. That really isn't a huge amount of tax. Savings income is a little bit of a knock. I've sort of got quite a large amount of savings. This is from all of this seems to be quite delayed. The dividend rates is going up in April, but savings going up sort of in a year and a half. That actually won't hit me, I guess, because I'll have paid my tax by then. So yeah, not too bad there. There's some sort of more this wasn't really talked about, the freezing the income tax bands, but also freezing the inheritance tax bands. So if you've got a sort of 500, 600,000 pound estate currently, and the people haven't passed away yet, then you give that another sort of 6 years until 2031. That's going to be worth an awful lot more, and you'll be paying an awful lot more inheritance tax. And they want to clamp down on avoidance of that as well. Some various sort of bits and pieces, nothing huge there. Venture capital trusts and EIS schemes and that sort of thing. They want people investing in the UK. Can't imagine that's going to happen. The ISAs, a lot of people very, very unhappy. They sort of worded this in a really weird way. Basically they're dropping the cash ISA limit for under 65s to 12,000. They sort of worded it as they're segregating 8,000 for investment, which sounds like taking the glass half full approach. But yeah, the overall limit will remain at 20,000 until 2031, which is hell of a long time. Again, it's a sort of bracket creep, fiscal drag type policy, which is a bit of a shame, but I suppose we can live with that. It was obviously talks of it being cut or increased. Crazy that you can have talks of both. But there you go. Not a huge amount else here. Employment tax, salary sacrifice. This is sort of the one that a lot of people are very, very annoyed about. Have national insurance applied on salary sacrifice pension contributions above 2,000. So, yeah, to be fair, this is from April 2029, so it's quite a long way away. There's potential for this to get walked back in the final year, sort of just before the election. But if they don't, I suppose, and you get people sort of piling into their pension before April 2029 and then maybe easing off a little bit, you're certainly going to get people moaning. To be fair, I think sort of if you're on 50, 60,000 maybe, and you're paying in the sort of default 4% auto enrolment pension, from what I'm thinking, you're going to be paying £2,400 into your pension, which I don't think would be, as far as I'm thinking, that counts as putting money into your pension, and you would be taxed on £400 of that. You get 2,000 free. And or whether this just applies to salary sacrifice, you get to put your normal amount into the pension, and then you can also salary sacrifice 2,000, or whether it is total contributions. Because I sort of think, if you're earning money, shouldn't you pay national insurance on it? You get these people sort of sacrificing £40,000 of their income, putting it all into their pension, not paying any national insurance on it, and then when you claim your pension, you're not, obviously paying any national insurance on that. So yeah, you kind of think the national insurance total pot is taking a bit of a whack. So yeah, unsure about this. I'm not entirely sure how it works. Obviously, I've opted out of my own pension. National living wage increasing. This is just going to stoke inflation, I would have thought, 4.1%. They say they're helping workers. I would say that isn't really helping workers. This was a bit of a mixed bag. There's still sort of grants on EVs, but they're also hitting EVs with a pay per mile addition to vehicle tax. So EVs will now pay the looks like £195 tax, sort of as a fixed amount. It doesn't depend on, like, obviously there's no emissions, but sort of weight of your car I thought they might do it on. But it looks like it's just a fixed charge regardless of what car you're in, 3-ton sort of massive SUV or a Fiat 500. But they're then going to do a pay per mile charge. So again, if you do sort of 10,000 miles in a Fiat 500, I would say you're probably going to do less damage than sort of 8,000 miles in a huge SUV. But this is the way they seem to want to do it. And plug-in hybrids pay a reduced rate set at half of the electric car rate, which is quite interesting. Quite a sort of, a sharp, a sharp drop, half the rate. So you could say encouraging plug-in hybrids, which wouldn't be the worst thing, I guess. Gambling taxes as well, not good for evolution, I suppose. But UK is a very, very small market for them. And yeah, more fuel duty cuts. That's sort of kind of expected. Alcohol duty I thought was a little bit surprising. They always seem to be trying to cut alcohol duty and say they've cut 1p off a pint, as if that sort of means anything. But yeah, seem to be hitting all the sort of sin things: alcohol, tobacco and vaping, and soft drinks. So yeah, not good for people. And of course, crypto reporting. Everyone's sort of getting very, very upset with this. I don't really see why. This sort of seems fairly normal. The UK crypto asset service providers, so your Coinbase UK and Kraken and people, are going to report to HMRC on UK tax resident customers. I would sort of say if you're, being legitimate and paying your taxes anyway, then probably shouldn't be all that bothered that they're reporting directly to HMRC. They just want to see that you're reporting the same numbers. I think people still sort of seeing crypto as a way to stick it to the government and they're not getting any of my money. It's just, that was never going to work. They were always going to sort of put some regulation in place and, you have to pay your tax on it. So I'm already doing that. Not particularly bothered if they sort of report my dealings to HMRC. They'll get their pound of flesh. So yeah, that was pretty much it for the budget. As I say, sort of not a huge amount has sort of whacked me really. If that's it for another year or another 6 months, whatever it is, then yeah, I'll take that. There has been sort of a lot of talk of, them putting out horrendous trial balloon type stuff. You sort of keep talking about raising capital gains tax to income tax levels, which would be a hell of a whack. And then when the budget comes out, they don't do it. It makes sort of smaller tax rises seem not so bad, and people go, "Oh, I'll take that." But yeah, for a sort of quite a aggressive load of small taxes, I don't really think I've been hit particularly hard here. No news, because even though the US government has opened again, it's just really, really slow getting their news coming out. ADP are now doing their weekly employment change thing. I think this is actually an average of the last 4 weeks, even though they are sort of releasing it weekly. But that's 13,500 negative jobs for the week. So yeah, does potentially push forward for a rate cut. It looks like the rate cut expectations for December are now at 87%. So yeah, be surprised if they sort of don't do that now. They don't like going against the sort of conventional wisdom, and it's like 12 days away. So yeah, it would take quite something for it not to happen now. And yeah, there sort of basically wasn't a whole lot of other news worth talking about. So portfolio-wise, not a whole lot of change really. The pie chart is starting to look very, very colourful. More on the ETFs, and options is sort of coming back again with some of those going up quite sharply. Not a whole lot. I need to reorder the chart, of course, because some things are getting a bit out of line. Fresnillo has sort of rocketed back up again, and Coeur Mining sort of is now the biggest holding, with Amazon sort of coming down slightly. But yeah, not exactly massive changes there. Obviously, the total is still very, very large. As I say, about 125,000 up for the week. A little bit crazy. Still the large cash amount to come off later on. ETFs are sort of doing pretty well, starting to get dividends flow out from them. I got iShares Clean Energy, sort of about 200 quid. So yeah, it'd be nice to start getting some of these dividends flow in. And oh yeah, so just looking at the option side, since it's still obviously the most volatile part of the portfolio, and yeah, one of the sort of larger parts of the portfolio. We've now got Equinox Gold looking incredibly profitable, sort of bearing in mind, you know, a few months ago, 6 months ago maybe, this was in the red, is now 600% green. That is very, very nice. Still got until January 2027 to run on these, and I think it could do very well. Similarly with B2 Gold, it's sort of come from about 3 grand in the red last week to 7 grand positive. Sort of been a deal, it looks like, with Barrick Gold and the Mali government. So people sort of took that positively. Still could do with maybe a little bit of military help to help with the sort of terrorist action over there. But yeah, it's looking potentially good. And obviously gold and silver prices have come back, even though, well, Equinox and B2 don't really produce any silver, but it does seem when the silver miners go up, when silver goes up, the gold miners actually do quite well. It's sort of a bit of a paradox. They shouldn't really affect each other. A little bit of a gain on herein as well, even though sort of crypto's way below the highs. It's done reasonably well the last week. Sort of helped out Hive a little bit as well. I sort of have made some changes. I was sort of selling off some of the this coming January options, and bought my January 2027 ones. So the loss has sort of come down a little bit, but yeah, that isn't sort of me doing well. That's me selling off options in the red, which I'll get a tax loss sort of refund on, but yeah, it's not sort of quite as rosy as it looks comparing to last week. It's still very much a, poor sort of failing position that I'm trying to maybe make some money out of next year, but we'll see. Hymax has sort of had quite the knock. He's going ex-dividend, I think, at some point, sort of today, or possibly, I don't think it's today, it's in the next couple of days. So yeah, that doesn't help the options at all, because they're based just on stock price, and yeah, I don't get the money in the options, so would always prefer buybacks with options because it helps the stock price. And Nakamoto is sort of basically dead. I don't think the treasury companies are going to produce a huge amount. They are March, to be fair, on Nakamoto, so there's a little bit of time to run, but can't imagine that's going to do gangbusters in that time. And a little bit of cash in there, which I sort of can't really figure out what to do with. Do need to keep it still a fair amount aside for that tax bill next year. But yeah, interesting. Let me know your thoughts in the comments below, and like and subscribe. See you soon.